The 2019 Financial Planning Week takes place on the 7th to the 11th of October. And as part of Financial Planning Week, I'm pleased to introduce you to a panel of experts to answer some general questions you may have about financial planning. So as a starting point, I'd like to introduce you to Kalpana. Could you just give a summary of yourself?
Yes, I'm Kalpana Fitzpatrick. I'm the finance editor at Hearst Magazines, which publishes titles like Good Housekeeping, Red, Prima, and also runs the Financially Fabulous campaign, which is all about empowering women when it comes to their finances.
And my name is Catherine Morgan. I'm the founder of the Money Panel. I'm a qualified financial planner, and I also run a Money Circle membership to help to empower and equip women to be financially resilient.
Thank you. My name is Chris Morris, and I'm the Deputy Head of Financial Planning at the CISI.
My name is Claire Phillips. I'm a Financial Planning Director at First Wealth, and we truly believe that great financial planning can change your life.
My name is Dilwar Hussain. I'm the Marketing Manager at the CISI, but today I'm here to represent the public.
Thank you. So before we came on air, we were discussing sort of where should we start here, and I think a really good place is just to set out the difference between financial planning and financial advice, and there is a key difference. So Catherine, if I can come to you initially just to answer that question.
Yeah, sure. It's a really interesting question actually, because I would say from most people connect financial advice to being wealthy and having money to get advice about, or on. Whereas financial planning is very much about how to build a plan, no matter what your situation is, to get to the stage where you've got money to get advice. So the differences for me is that advice is kind of when you've got a specific need for a product. So for example, if you've just had a new baby and you're wanting to put some life cover in place to protect your family, that's a specific need where you need specific advice on a product. Whereas planning for me is about, actually, you may not have a specific moment in your life where you think, right, I need to go and plan for this, but it may well be that you're just wanting to create better habits and have a relationship, like a better relationship with money, to help you to save more money and then understand how to invest it. So for me, it's about building the stepping stone, step by step. What do I need to do right now to get myself into a better position in the future? And the beauty of financial planning is it actually maps out step by step different scenarios. So what would happen if I overpay on my mortgage? What would happen if I ask for that pay rise that I've been meaning to do for 6 months? So it's looking at different scenarios and then helping you to kind of map out what direction do you need to get into. Thanks
for that. I mean, the ethos of Financial Planning Week is helping people get better, more organised with their finances, and sort of getting them really set up for their future. Claire, if I can come to you and maybe just sort of comment on some of the sort of simple and basic tips, financial planning in its purest form, what you would start out looking, and also, when can someone start financial planning?
I would say it's never too soon to start with your financial planning. Even if you haven't got a bean, it's a great time to start because you're starting with a clean slate. So you can start off very simply. It could be just thinking, I'll set X aside a month, etc. Or it could be, in fact, it might be the opposite actually. It might be paying down a debt. So that is financial planning. A lot of people think financial planning, I think like you just mentioned, is saving and investing. A plan doesn't have to be about that. It can be about paying down debt, which is a core issue, I think, for many younger people with credit card loans, etc., etc.
The earlier the better then is really the message. And,
yeah, definitely.
And Kalpana, from your sort of followers and work that you do, would you like to add to that?
Absolutely. I think, speaking from a women's perspective, I think it's easy to put it off because we go through so many different life stages. So it's like, I don't want to think about financial planning at the moment, or I'm busy starting a family. It's just something you shift it aside way too much, or you might rely on a spouse to do it. But it's easy to put it off. I think it's something that's, women don't necessarily think about. So I think it's something to really flag and to say, everyone should think about financial planning at some point in their life. And if you haven't thought about it, you might want to ask yourself why. And also, people have goals. What are these goals? And how are you going to achieve these goals? I think those are the sort of questions you need to ask yourself, and how are you therefore going to achieve them? And do you need to speak to a planner? I think the most important thing is also not to leave yourself vulnerable, because if you do leave it to a spouse or partner, you might not be in the know. and also the fact that, you know, women live longer is going to be quite relevant to their life as well. So yeah, I think it's just something to really think about at the moment, and you know, a lot of women probably don't think about it or don't feel they need to.
It's a really good point. We know we are all living longer, and therefore the importance of saving for the future is even more important than ever, really. And how about you, Dilwar, from a consumer perspective? You know, I'm sure that you've got a lot of different questions.
I do. The main question for me is, you know, I don't have millions of pounds, but is financial planning for me? If I don't have enough to go for a portfolio, I don't have all the investments, is financial planning relevant for someone like me?
I think it's having a good relationship with money is really what it stems from. And if you have a good relationship with money from the outset, you're far more likely to continue that as you grow older. So, you know, if you're an 18-year-old, what should they be doing? You know, is it a case of, you know, looking at your income to expenditure, you know, working out, is there a surplus, is there a deficit, and really building from there? I mean, how would you what tips would you give, perhaps Catherine, if I can come to you, someone starting out, how should they approach it really?
I think that just bringing consciousness and awareness to money, because when we use words like income or budgeting, or that can send people into a huge spiral of like fear and doubt and shame and, oh my gosh, I have no idea how any of that works, and why would I go to a professional for that? Because they feel that they're just going to be judged. Yeah. So I think actually for a lot of people, what we need to try and do as a profession is to help consumers to understand that actually it doesn't matter what our relationship is like with money, it's understanding what that relationship is. And I'm sure that, like you said with your readers, will understand and see that, you know, some of us will be massive savers and we'll just want to, every penny that we earn, we just feel the need to kind of, you know, keep it protected. Whereas for other people, they find it very difficult to save because maybe they have emotions that drive them to overspend, for example. So I think the more we can talk about the emotions around money, and the more we can talk about how we behave around money, if we can change our thought process, it changes our behaviours. And by changing our behaviours can put us in a better position to then actually plan. But just sometimes that word planning can just send people into, well, I'm not a planner, so that's not for me. And I think sometimes we get wrapped up in the semantics of it, whether it's advice, whether it's planning. It's just moving one step forward from where you are right now. What is that one step that you want to do to move one step further, and actually going and seeking advice or planning or coaching or whatever that is from a professional who can help you to hold your hands, not make any judgments, maybe explore and help you to understand what your relationship with money is, and then come up with a solution at the end of it that you can work with. Yeah.
I mean,
sorry, I was just going to say, I think the one word that comes to me here, which ties in with everything you said, there's clarity. So you want to be able to get clarity on your relationship with money and your past history, and it's not just your personal history. It might be you've learned that from your parents or other family members or your spouse or your significant other or something from the TV or whatever. It's clarity about next steps, what you could be doing to get where you want to be, because planning isn't necessarily just about the here and now. I think great financial planning, you're looking to get clarity not just now, but in the future. You might say, actually, in the future, I want to be doing X and Y, and a great planner will work with you to say, okay, that's fantastic. What do you need to do to get there? And is it realistic? And if it's not realistic now, what might you have to change slightly to get where you want to be? And so it's clarity on all levels, I think.
Sometimes it could be like a change in behaviour is what they need, because actually for someone who's maybe an overspender, like I was in my 20s, I worked as a financial advisor, and I lived in my overdraft every month because I was driven by the emotion that was behind it. So for me, by changing the emotion, completely changed the whole landscape of my financial future. So I think sometimes it's understanding exactly what you just said, understanding what is the next step that you need to take. Is it behaviours? Is it motivation? Is it asking for that pay rise? Is it, you know, how you can grow your business to make more money? You know, is it learning how to invest because actually you have got some money but it's not working hard for you? It's lots of different things for different people.
And I think to think it's never, don't always think it's too late. It's never too late. Yeah. You can always change something.
I think it's also about breaking that taboo, isn't it? Like we've written massively about people don't want to talk about money because, you know, it's a closed subject. We don't want to talk about it, and therefore I can understand why people are just scared of the idea of financial planning. It's probably not the route most people see themselves going down. And I think sometimes it's just small steps, and that's being able to talk to your friends and family initially, and it's okay to think about money, it's okay to talk about money, and I think that once that taboo is broken, that is actually probably the very first step anyone should take.
Yeah, I mean, just sort of thinking about other questions we've had in previous financial planning weeks is from, often younger people thinking about, buying a property, and as you, buy your first house, with that comes commitment, and financial planning is often more about, or it's just as important to look at things like protection, having a will in place, powers of attorney. That's just as much part of financial planning, and having a good foundation to your future. So Catherine, perhaps you could maybe just allude to some of the things that you'd recommend people have in place along the lines of, protection and wills where necessary and so forth.
Yeah, and I love the word that you use there about foundations, because I think it is about starting with foundations and then working your way up. So if, for example, you're maybe in debt right now, and I hate just even using the word debt, but if you've got money that's already spent, then it's looking at how you can protect that. It's looking at have you got awareness of your spending habits? Have you got a spending plan in place? Do you have an emergency fund so that if something rocks your world, you've got a backup there that you could fall back on, which kind of comes in line with insurances. So do you have an emergency fund? Do you need any types, any insurance that can kind of double up in that event that maybe you're off work because you're poorly, or your family's poorly, or you lose your job. So it is kind of setting those strong foundations, and wills and things like that is one of those topics, isn't it, that no one really wants to talk about, because no one likes to think about what's going to happen in the future. No one likes to think about what would happen if you weren't around as a parent and you've got young children. But it's one of those things that you just kind of have to have that conversation, that awkward taboo conversation, get it done, and then it's done. Like, you haven't got to think about it again. But everybody, I mean, I think as a culture, is it something like 60% of people don't have wills in place now, which is quite scary, but because it is a scary conversation to have. So I think having that conversation with a trusted expert that can help you to kind of think about what kind of questions I need to be thinking about, what kind of things I need to be thinking about. But wills, emergency funds, protection, looking at creating yourself a spending plan, so you've got an idea of bringing some awareness to your finances. Those would be the main things for me that would sit under those
just
kind of.
Just underpins the whole future.
Yeah, future-proofing your finances, essentially, isn't it? And just on that point of wills, it's also just, it's so far away, when I say so far away, something could happen at any point, but it's like, so you don't want to think about someone passing away or something bad happening, and it's so easy to put something like that off. And when it comes to finances, I think a lot of people also look for instant gratification. So if they don't see the benefits of something immediately, they're a little bit put off, and they do, just essentially just put it off. And wills is definitely one of those things.
Yeah, and I would also say as well, when you're looking at the foundations, is have a look at what you've actually got, because a lot of people don't always appreciate that they might have life cover through work, for instance. So or they might have some sort of payment protection plan in work, so if they're off sick, they get sick pay, and knowing how much they get from work, so that then if you might actually have enough cover already in place, so you don't have to spend that money on that, you can actually spend it on something else that will help you with your life. So it's always doing that, and always, I know it's really boring, but things like checking your insurances, so you're not buying insurance for your mobile phone when you're already paying for it through your house contents and things, because that can save you, it all adds up. If you check and you're not double paying for things, it all adds up, and it gives you more freedom then to have more fun if you want to do that, or put it towards something like saving for something in the future. So it's always worth doing.
I mean, one of the things that sort of is underpinned within Financial Planning Week is the fact that the public can actually register for free surgeries with a number of financial planners around the UK. So we'd really encourage you to take those sessions up where possible. But there are a lot of free resources available. Sort of budgeting tools and so forth. Claire, perhaps you could share if you have sort of one or two.
Yeah, okay. So we find, particularly with our younger clients, they really love some of the new starter banks, the Monzos and Starling, etc., because it really helps them see where their money's going really quickly and really easily. And particularly a lot of our younger people are entrepreneurial as well. So some of those banking systems will then link into some bit boring, but into accounting software. So it helps them with their business as well. So a lot of them really like that, I think. It's really helpful. And there's just like some of the resources you offer, the podcasts. It's wherever you look, there's just podcasts whether it's female orientated, whether it's just general, or whether it's for younger people or older people. I think the world is your oyster now out there. There are so many resources.
Yeah. And with I mean, you know, it would be difficult to have a conversation like this without mentioning pension freedoms and how that's changed and what that means for people. Catherine, perhaps you could just sort of, I guess, give a flavour of what's gone on and how it can actually be beneficial. What does auto-enrolment mean? These are all sort of terms that are sort of bandied around, but could you just briefly explain what that actually means?
How long have we got?
Yeah. Not long enough.
So pensions freedoms in a nutshell is, and actually this is a really valid point because so many people aren't aware of the flexibilities now of how to draw from pensions. So first of all, let's strip away the word pensions because it's just a bucket of money for your future self to maintain that lifestyle that you have right now, that you're working hard to maintain that into your future. That's all a pension is. The pension is just like a wrapper. So the way I always think about it is it's like having two jars of boiled sweets. You've got one jar that's got sweets with no wrappers and one jar that's got sweet wrappers around them. And that's the only difference between a pension and an investment is that the one with the wrappers around it has got a little wrapper around it that's protecting it from the tax man getting at it. And there's tax benefits associated with that. So most people are aware now of pensions that you can make a contribution into that sweet jar and the taxman will add in a couple of extra sweets into it. That's all in reality it is. And pensions freedom means that now when you open up that jar, anywhere currently from the age of 55 onwards, you can choose how you take those sweets. So you could choose to empty the entire jar and exchange that for an income for the rest of your life and potentially for your spouse. Or you take a few of those sweets out, tax-free, and the rest of it you just leave in that jar to grow and multiply. And if something happens to you, that jar can be passed on to your children or your next door neighbour or your cat, whoever you want it to go to. But then you've got the freedom to be able to dip in and out of that when you need to. Of course, you want to make sure that that pot is going to continue to grow and last the rest of your life. But essentially, that is all that pensions freedom is a game changer because it allows people just that freedom and flexibility, which is what most of us want, right? With money, we want that ability to have choice and freedom. So pensions freedom is really important that people understand. It doesn't apply to all pension schemes. So if people have got final salary schemes, you know, they're a golden handshake for many people in jobs because they're giving you a guaranteed income for the rest of your life. But actually for many of us that are in auto-enrolment, we are being auto-enrolled into a savings bucket that's going to provide us that lifestyle for the rest of our life. So, you know, that's why it's really important that we do understand, I guess, what choices we have through work. And the great thing about thinking about the sweets jar analogy, sorry, I'm going on a little bit here, but you can tell I'm very passionate about this, is that you can choose what those boiled sweets are. If you've got ethical views, for example, you want to be investing and giving back to the economy and investing sustainably and in perhaps in companies that, you know, with tobacco companies are weeded out or gambling companies, you can do that through auto-enrolment. All you need to do is contact your pension provider through maybe your HR department and ask them, can you give me a list of all the ethical funds that I can invest into? And it's just a case of a form that you switch your fund that you're invested into where you want to go. So there's so many choices now that I think with auto-enrolment, that's great. That's the first step to get people into the schemes. But actually now, I feel that an employer then has a responsibility, and also as, you know, for ourselves, we have a responsibility to just understand what our choices are. But there's so much choice, isn't there now? With,
as you say, it's a mechanism for them to save for their future.
Yeah.
And that's really what it all is. And I think with greater transparency, we've had, you know, huge IT improvements over the last, you know, year, let alone last 10 years. So the ability to actually view your investments and actually see what you're putting your money into each month is really valuable. I
think actually that's a really good point. I think that's the benefit of the IT is you can see at will any minute of the day what you've got and how it's doing. And I think that makes it far more real for people than if it was just a pension and you get your statement once a year, you just look at it and go, I have no idea what that means, and ignore it. Whereas I think if it's there, like I know with my work pension, I've got an app on my phone where I can look, I can say, oh, and it's quite exciting. So, oh, it's grown, or maybe not so exciting, oh, it's gone down, because that does happen, that's reality. And I think it makes you more engaged with it because you feel like it's yours because it's on your phone and you can own it and you take more interest in it because it's quite easy to look at it and go, oh, I can change that fund like you suggested. I think the IT is breaking down those barriers. I think it's making savings and pensions and everything so much more accessible, I think.
It's interesting to say that because although, you can, for the pension providers that do have an app, not all of them do, you see more people with banking apps, but ask anyone on the street, do you have a pensions app? And they'll be like, no, I don't have that. And actually, I'll definitely encourage people to, if your pension provider does have an app, download it and be sort of engaged in your pension as well. And also the point about auto-enrollment, that's fantastic. We've got more people saving into a pension than ever before. Opt-out is minimal. But I think it's, there's two problems. One, if you're self-employed, that's still a big issue. Self-employed people are still, shying away from pensions because they don't benefit from the employer contributions. But those that do, that's free money on the table. And I think that's such an important message. Would you leave that free money on the table? If someone said, do you want a pay rise?
That's a great point.
But also, how much are you paying into that pension? The more you pay, your employer will match it to a certain amount. So I think you should be active and find out what that is, because that is free money that you're essentially not looking at. So, and if you can afford to increase your contributions into an auto-enrolled scheme, then that is something you should definitely look at, because
sort of the financial planner can help you to do, right? Because they'll have a look at what do you currently have access to and what do you not, and are you self-employed? Are you missing opportunities?
And also, if you do download the app, even if whether you're self-employed or employed, the point that you made is take a look at the funds. Most of them will put you in some default fund, but that doesn't necessarily mean you have to stick to the default fund. And just take an interest in, if you don't know what you're doing, speak to someone. And also, like you said, the world's your oyster when it comes to reading about money, whether it's online or in magazines and newspapers, podcasts. There's a wealth of knowledge out there. So definitely be engaged.
Stuck into and.
On the topic of pensions, so from my point of view, and maybe certainly the public as well, a pension might not be something we access till 30, 40, 50 years in the future. Is it something that we should be looking to contribute extra on top of the employer pension? And second question being, can people rely just purely on the state pension alone? Is that something, I think that those are the kind of questions people ask.
Yeah, no, they're very good questions. Whether you should contribute more, there's no set answer to that. It really depends on, can you afford it? What other resources you've got? What your hopes and fears are in the future? Also as well, like Kaplan was just saying about the free money, if you've got the capacity to put more in and your employer will match those contributions, you're getting free money plus you're getting tax relief, so that really helps you on your tax bills as well. And you should look at, if you're thinking that you want to have a nice lifestyle in retirement, you do need to look at other resources, because potentially your pension isn't going to be enough on its own. You have to look at, could you save elsewhere, for instance, an ISA, bank accounts, whatever suits you. Could you make use of your property, etc.? Because unfortunately, there's so many scenarios where people have gone, oh, I've put some money on my pension, that'll be fine, but they didn't actually look at what that's going to give them retire when they stop working or when they start phasing out working. It's very sad when people come in and said, oh, I started a pension 30 years ago, I've been putting £50 in a month, that would be fine, won't it? And you're like, actually, probably not. No, it depends what you want to do with your life. And I think the harsh reality about the state pension is, on its own, that's not enough. Yeah. If you think that's currently, what is it, about £8,000? How would you like to live on £8,000 a year? If it still exists. Exactly. Or if indeed it still exists, if you actually live as long enough to get it, because they keep pushing it and pushing it. And as we've seen, that is the reality about the state pension. For instance, today the courts found that actually they won't give those ladies back the old state pension age of 60. The reality is it is getting further and further away. So you have to look at what you can do to fund it yourself.
I think as well, like those are great, and I always say they're really common questions. Yeah. The first thing is go and see a financial planner, because they'll help you to understand, well, what does your state pension look like? You can go and grab a state pension forecast online, £164 a week. Who can live on £164 a week, So, but it's also not thinking of it in isolation, not just thinking, can you live on the state pension? Can I live on this pension contribution? It's piecing everything together, isn't it? Because you may have savings plans or inheritances, or trust funds that have been set up, or you might be saving money into a starling pot, or
you may have a massive great house because you've got a big family, but when you retire you think, actually, I won't need that 4 bedrooms now, because hopefully, please the children have moved out, so I can afford to downsize, and then that will give you a nice pot of money to help you do whatever it is with your lifestyle. You know, when you
getting that balance, isn't it?
It is,
Yeah.
and it's very much a balancing act, and that's, I think, really where the financial planning piece really comes in, because it's giving you that clarity. It's like, I think I want that in the future. What do I need to do to get there? And it's looking at all the different options to get you there. Is it affordable? And also, it's a balancing act between living now. It's great that you're saving for the future, but you've also got to have a life now as well. You don't want to be scrimpy and all like, oh, I can't put the heating on.
You've got to enjoy as you say, enjoy your life.
Yeah, and it's always a trade-off.
yeah.
There's a balance between the two, and that's where, again, financial planning will help you. It's like, if you go mad and spend everything now, what are the implications in the future? If you go for a middle road, what are the implications for the future? And I think that's where the financial planning gives people the knowledge so that they can make the choice. If they choose then to spend all their money now, knowing that they're going to not have a lot in the future, hopefully they've done that from a place of knowledge and education, rather than just that.
Yeah. One of the things which I think a term is a better term rather than retirement is financial independence.
Yeah.
And one of the things that a financial planner can help with is look at the scenarios of, if you were to work a little bit longer, you know, how would that then impact on your retirement? If you were to retire a little bit earlier, you know, could you live off a little bit less? And they can answer these sort of questions, and I think that's you know, incredibly valuable, rather than looking at financial advice or financial investments as just investing. It's about your own life and how you can live your life, and these are the sorts of things that planners can help with.
Because we kind of, when people contact us, I kind of say, let's just ignore the money for the moment. And people go, oh, what do you mean? I've phoned off out on pensions. Like, just ignore that. Actually, what is it about your life now that you'd like to change, and in the future? Find out about that first, and then bring the money in. Have you got the resources? You know, so the money's only there to give you something else, which is a lifestyle, or whether it's a lifestyle for yourself, or whether you want to save it to give it to your children or someone else for their lifestyle, or what their dreams and hopes, or whether it's to a charity to help them achieve their mission. So money is just money. It's just there to give you something else.
That you want to.
Yeah, it's important you know about it, and we have that great relationship with it, and it is important. But at the end of the day, it's just money, not being blasé, and it gives you the life that we all want to live.
It's quite important to just, you know, sit down, write down your goals, what it is you want to achieve. Because I think it's even just whether you're investing for the long term or just putting some money away, is what is it for? What is it you want to achieve? Because I think that puts you in the right mindset, as we were saying earlier. And yeah, I would definitely encourage everyone, just sit down and, you know, put down those goals and then work towards them.
And people find that hard sometimes as well, though, don't they? Like,
they haven't thought about it.
Yeah, and it's like, well, so I'm sitting there with my cup, you know, you're sitting there with your glass of wine, like, what do I want? Like, it's quite a deep question sometimes, isn't it? And so sometimes thinking about what do you want that to feel like if you're currently feeling stressed at work and your boss is driving you nuts, and you know, your kids are driving you nuts, it's like, what do you want to feel like in 5 years' time? Even in like a month's time, break it down into like real small actions. Like, where do I want to be at the end of the year? Where do I want to be next year? Then where do I want to be in 5 years' time? And sometimes thinking about that can be easier than thinking about, you know, maybe where do I want to be when I retire and I'm sitting on that park bench with a golf club? You know, that's the kind of typical, isn't it? The typical stock image that we see when we think about pensions. It's that old couple on the bench with the golf clubs. You know, it's in reality, that's not what it's about. It's exactly what you just said, Chris, about financial independence and bringing some meaning to money, because money is there to give us choice, to make us happy, and that's ultimately the end result for most.
I find people actually don't always know the value of the money. I mean, they know in pounds and pennies what they've got, but we have a lot of people come to us and say, I've got this, this and this, but they have no idea whether that's going to give them the lifestyle they want now and in the future. So it's pointless them having accrued that money if they don't know what that means. Some of that, again, going back to financial planning, that's the value of financial planning. We can work with that and say, actually, having that amount of money means you can do this, this and this, which is an amazing thing when you tell people who are really, for instance, unhappy in their jobs. You can say, well, actually, do you know what? You've got enough in the bank in your different pots. You could actually stop now if you wanted. Or not quite there, but actually, you know, you thought you had to work 10 more years. You've only got to work 5 more years. Or you could stop sooner if you just shaved something down. And that is an amazing, that's one of the best bits of my job, really, is to give people that gift of being able to have that choice and that freedom, because they just don't know what that money can give them. So
And just going back to the relationship with money, starts at a very young age. Does anyone have any sort of tips of how you can introduce money to children in terms of, I'm thinking along the lines of pocket money, tips for saving. One of the ones I've heard previously is for every year that they are, you give them £2. So if they were 5, you give them £10 and a month, that is. Others, yeah.
Things have gone up since my day.
I think it was a month, not a year. But anyway, so is, again, is there anything that you maybe can think of you've done personally or to introduce money and good saving habits at an early age? Because I think the earlier you can start, the better.
I mean, I would definitely agree with that. I've got 2 little boys, and actually, they're 10 and 6, so I've definitely introduced my 10-year-old to the prepaid card.
Yeah.
I did come across a challenge, which he wanted to buy V-Bucks with it, which is currency for games, and I was like, okay, not bad. But it's also, he likes playing chess, so I use the rice grain theory to talk to him about compound interest. We didn't go all the way, but he kind of got the idea of it. A lot of children don't go into banks nowadays. I remember going into a bank with my dad, mainly because I was going to get a free toy in return. It was exciting. But the minute I got that little book that told me how much my money was growing, I was really excited. And every time someone gifted me some money, I was like, can we take this to the bank? And that was a habit that my dad installed in me from a very young age. But I think the challenge that parents have today is that, you don't go into a bank branch, it's all online, and it doesn't quite have the same feeling. So I made a point about taking my boys into a bank and say, this is a bank and this is what it's all about. So they have a bit of, in a bank, a bit of junior ISA, which don't really talk to them about at the moment. So, mixed things, but I think it's definitely being able to talk to your children, just being open about the subject about money. So we do talk about, I do tell them, if you can't afford something, you can't have it, and this is why. Being able to say no, let them earn certain pocket monies. To
understand the value.
Exactly,
at an
just
early
say,
age.
So I think there's just so many things, but I think the main thing is be open about money with them and let them know it's okay to talk about it as well.
Yeah, no, I think that's great advice.
I think it's also part of because children, depending on the age, like I've got 2 boys similar ages, and I think some of it depends on what they see, and some of it depends on what they hear, and then what they do. So it's almost like it's being mindful of the language that we're using around money. So it's so easy, isn't it, to say, well, they want something, and you just say, well, we can't afford that, but actually that can send a message that maybe money is hard to come by, money doesn't grow on trees, which obviously a lot of us heard growing up around money. And so we have to think about kind of what language we're using around money. That's the first tip I would say. The second thing is there's so much research done around the earlier you start investing, the better. So one of the things that we did for my 2 boys is we set up some junior pensions for them. And we put £20 a month into each of their pensions. And there's been lots of statistics to show that if you put in, I think it's £5 a week into their pension, which is quite a lot. No, it's £5 a day actually. £5 a day from the day they're born until they're kind of in their 20s, then that pot could be invested and compounded and be worth like £1 million by the time they retire, which is a significant amount of money. And I would say probably £5 a day is not necessarily affordable for a new parent. But just the concept of compound interesting and putting money aside for their future is a really good one. And I also think that using like role plays and gaming with kids, particularly now with like technology, there's so many great apps on the market. There's so many games that you can play with them. Monopoly is a really obvious one. And they've gone digital with Monopoly now. You can actually use like cards. But role plays when they're 2 or 3 years old, exchanging, my son used to love that. We used to have a little shop set up and we'd exchange and we'd get the cards out and we'd get customers coming making complaints and asking for refunds and like just really good fun. And teaching kids about scams as well. I've done an interview on my podcast before about this game that a company uses where they talk about compound interest with like stacking towers, and then like and boys generally want to take more risk than girls, and they do this exercise where like someone pretends to ring up and it's like they're going to take away all your money. Like if you give them all your money, they'll double it overnight. And all the boys are like, yeah, let's give all our money to this person. They'll double it overnight. And then obviously they then show them that actually it was a scam. So I think depending on their age, getting them to think about those types of things, just making them aware is a really good habit to get them into. And I love what you said about the going into the physical bank. Like, we do take our boys into a physical bank, and they actually reward us £5 a month for paying money into their account. And the kids love it. Every time they walk past this particular bank, they're like, yeah, can we go into the bank this month? You know, that it is part of that excitement of the doing. And giving them responsibility as well as they get older, giving them responsibility about, well, rather than you making the decisions all the time, give them decisions to make around money. Even if it's not, they don't make a great decision, they can learn from that.
Learn from mistakes. Yeah, so I was just going to say, it's also like parents when they have children, and I think this is where talking to someone is always going to help, because the number of people I've come across who said, I had a baby recently, I've opened a junior ISA, and then you ask them what type of junior ISA is, and they've put the money into cash, which they've consistently been saving into. So being able to understand why it's important to invest for a baby, essentially, I think that's a really important message. And I think, if you can speak to someone, that's a mistake that you can potentially avoid. And people do go to cash because they go to the high street and they think, okay, this is what I'll do, and that's all I know, and that's what's available to me. So it's being able to talk to someone, open your mind about what else is available and where you should look to invest for your children as well.
Yeah. Okay. Just coming to you on the end, Dilwar.
Yeah. So I've watched this video, I'm a consumer, I've watched this video. What can I do right now? What can I do? I'm on my computer. What can I do right now to get started with myself, my financial independence? What steps can I take right now?
I think we've covered a lot of them. It's sitting down and thinking what it is you want to be achieving with yourself, with your life, like now. And you were saying the sort of short, medium, long-term goals, and they don't have to be big and they don't have to be fancy. It could be, I want to have enough to go to that special restaurant to take my girlfriend or boyfriend to in like 6 months' time or something. But then it could be the bigger stuff. It's it's being honest with yourself and looking at your expenses, or your lifestyle. What is your lifestyle costing you? Because I find most people are really good at telling me what they spend on the gas, the electric, the council tax. And then you say, okay, so at the end of the month, in theory then, you've told me you're spending this, you're earning this, you've got this much left. Everyone goes, no. And it's not, and it's being honest with yourself, like how many times do you just wander past Costa or Boots and just go, I'll just have that, it's only a few pounds, tap, off you go. So it's doing that, like I said, looking at the resources that you've got already. What have you got? Because some people unbelievably forget that they've got some money in X, Y, and Z. I do hear that quite often. I always find it astounding, but there we go. And make sure you're not doubling up on anything. And then I think it's then having got all the basic building blocks, the facts, it's then going and finding those resources and thinking, and then whether it's talking to someone, it could be talking to a professional, which is what we're here for. Great, please contact us. Whether it's talking to your friends, family, looking online, just spending a bit of time. And I think it's important to spend that time, and don't think of it as a chore. Think of it as you're investing in you're spending time and you're investing in yourself. You wouldn't think twice about thinking, oh, I want that nice new car or that nice new jacket. Think of it like that. It's for you, it's to benefit you. You might not see it like this second, but it will benefit you in the future. I think they're the main things. I've probably missed a few things, but.
So I've got another question, which is, are all financial planners the same?
No. So it's a really good question, actually, because one of the things that often I think is a barrier for people to reach out to financial planners or financial advisors is that they'll maybe go to someone's website, or they'll go to a kind of directory, and they'll go and contact one financial planner and have a conversation and find out their minimum criteria is 250,000, for example. Now, not every financial planner is the same. Some people have certain niches or certain clients that they work with. So within the financial planning world, you've got certain companies that work with athletes. Some companies work with people going through divorce. Some clients that maybe are building wealth. Some clients maybe that are retired, for example. And actually, if you think about it, from your perspective, if you're going through a particular stage in your life, you do actually want to see a financial planner that maybe specialises in that area. So my kind of tip, I guess, would be is that if you go and check out someone's website, or you don't feel that is the same for every single organisation, do some research and go and find a financial planner that is a right fit for you.
Yeah, and I would also say as well, once you find 2 or 3 that you think might work for you, is talk to them all, because there might be one reason why you pick one over another, and might just be something that you, I don't know, you just gel. It's like when you make friends and then you don't end up being friends with everyone. So with a financial planner, go and see different ones and just get a feel for them, and your instinct, I think, will help you get to the right one, as well as doing the basic research as well. Don't just pick one. It's like they always say for getting a builder, get 3 quotes.
Yeah, and often financial planners won't charge you for like an initial discovery call, because I think that's really important, like that, because it's a relationship you're building, like with a friend. So you want it to be someone that you can see yourself working with over and over again. Yeah.
Because financial planners want to work with people on the longer term as well. That's very much part of the financial planning. They want to be with you on your journey and see you succeed and support you, and be around as well if things change in your life, something unexpected happens. That's what they're there for as well, to help you deal with that and show you the implications and how you can work forward going forward. So the relationship, I think you're right, is a key point, as well as their technical ability, which is a given anyway.
So really, we've discussed a lot, and I think hopefully we've given you a flavour of some of the things that you can do to, take your finances a little bit more seriously. If you're starting out, then these are some of the things that you can do to get your future sort of on track, and some of the things that you can need to be thinking about. But ultimately, take advantage of Financial Planning Week. There's 2 ways you can really take advantage of this. One is by registering for one of the free surgeries throughout the country. Or if you're just looking for sort of more tips and tools and techniques of what you can be doing to help, then please go to CISI.org/FP week. So on that note, I'd like to sort of thank you all for helping and joining the discussion, and thank you once again. Thank you.